if we look at the scale of this company, it's the 15th biggest company in the Australian stock exchange. It has a market cap of about $17 billion. It employs about 12,500 people. But if you actually look in Queensland, we are Queensland's biggest company. And we carry that with great pride. We employ something like 6,000 or 7,000 people in Queensland.
The State Insurance Office had a number of very, very important commercial advantages in the early days. First of all, it had the monopoly on workers' compensation. All employers were legally compelled to take out a policy for every workman, and that gave the company a very solid financial base. It had all this business without doing any work at all. But workers' compensation also gave the employers of the company access to all work premises and all workers. And that was a great advantage in selling other forms of insurance. They had all their potential customers lined up, and they had contact with them all through workers' compensation. But I think one of the most significant advantages was the enormous administrative infrastructure of the state public service. It had really the whole state public service at its disposal, in particular law enforcement officers. With the coming of peace, we move into a period of great expansion. Business is expanding in the community. The SGIO business is expanding, but manpower is very, very difficult for everybody. The office is grossly understaffed. They think they're grossly underpaid. They find extreme difficulty in competing with the private companies. Between 1939 and 1951, premium income increased by 174%, and staff increased by only 18%. The SGIO was regarded as the servant of the state, and it had a duty to fulfil, and it fulfilled this duty by making cheap capital available. It was contributing to Queensland development. In name, it was an insurance company. In reality, its business has become increasingly that of a financial institution. It's attracting money and it's investing it in whatever was profitable, whether it's industrial, commercial enterprise, real estate, public enterprise, private enterprise. And in 1978, the government took the necessary action and established a workers' compensation board. This took over workers' compensation from the SGIO. The original raison d'etre of the office was thereby removed. This was the great break with the past, and it obviously left the organisation much freer to develop on new lines. In December 1985, the Suncorp Insurance and Finance Bill went through Parliament, and I regard this again as a pragmatic solution to a nonsensical situation that had come into being. The SGIO disappeared, Suncorp arrived, but it was a compromise. It was not a case of privatisation. The staff were no longer to be part of the public service. Suncorp was a corporate body, albeit a statutory one, which was to compete on equal terms with the private companies. But the board would continue to be appointed by the government.
This was at a time in the mid-90s when financial deregulation was really beginning to bite. Competition in the financial services sector was intense, and both Suncorp and QIDC, in order to remain competitive in that environment, needed significant recapitalisation. Post the merger, the government owned 67% of Suncorp Medway, and it still owned 44% of the Bank of Queensland. The government subsequently sold down in two tranches the Bank of Queensland holdings, and over the period 1998 to 2001, in three tranches sold down its holding in Suncorp Medway. At the end of the day, the government made significant profits on behalf of the taxpayer through the process. I've seen estimates of around $2 billion of profits. Well, what created the cover for what was an effective privatisation of two government-owned entities was a feeling that the average Queensland voter and taxpayer was sick of having corporate companies, corporate headquarters from Brisbane moved down south to Sydney and Melbourne. The sentiment in the electorate in Queensland regarding Queensland companies being taken over, or simply, if not taken over, simply their headquarters being stripped out of Queensland, out of Brisbane and moved down south, was really quite high. The period 2009 to 2015 is quite definitely the Patrick Snowball period. Patrick had a favourite phrase, ruthless execution, which the company has since modified a little bit to relentless execution. But it was about setting a set of goals, a light on the hill, and actually achieving it. And Patrick did that by empowering people. So he managed a number of things which some people said couldn't be done. That when Patrick took over the company, it was very definitely many companies, many brands. He would measure success at the end of the day when he could ask any Suncorp employee, who do you work for? And they would say Suncorp, not Amy or Apia or SGIO or another brand. And that's what he achieved.
The DNA of this company now is great people, great execution capability and great technology, but also a massive pride in what we can contribute to communities across Australia, and in particular in Queensland.
Suncorp today is a great Queensland.
Its soul and its heart is in Queensland, but it is also a very proud Australian and New Zealand company.